And as if all of that wasn't bad enough, the energy sector will be front and center in the one thing that's definitely going to get Wall Street's attention over the next few weeks. That would be corporate earnings. And while energy earnings are probably going to be bad, Bob Pisani tells us they'll have plenty of company, and that's not a good thing.
This week starts earnings season for the first quarter, and we've got a big problem. There's an earnings recession going on. Earnings growth for the S&P 500 is expected to be down more than 4% compared to the first quarter a year ago. And earnings expectations for the second quarter are negative as well. The third quarter is just barely positive, and it's dropping fast. Now, this is not good news. That's why a disappointing jobs report, on top of other disappointing economic stats recently, is a cause for concern. Companies cannot cut costs to keep earnings growing forever. We need the economy to grow to support higher revenues, that's the top line, and higher earnings, that's the bottom line. But Wall Street is not optimistic about this. Not only is earnings growth negative, but revenue growth is now expected to be negative for the S&P 500 for the next 3 quarters. Yikes! It's well known that energy companies are the main problem. We all know this. There's a huge decline in earnings expected this year. But they're not the only ones. 6 of the 10 S&P sectors are expected to report negative earnings growth, including technology in the first quarter. That's why weak job growth numbers are so worrisome. Even if the Fed doesn't raise rates until late in the year, it suggests choppy, sideways action for stocks in 2015. That is, unless the recent weak data is just a blip. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.